Hey, Doug DeBruin with Nexum Mortgage here. Today we're going to talk about one of my favorite loans as far as bang for the buck is the VA Interest Rate Reduction Refinance Loan, or otherwise known as the VA IRRRL. Why this is such a great bang for your buck is it's minimal paperwork, minimal effort on the borrower's part, and maximum benefit to the borrower for that cost. So today we're going to unpack what goes into the loan, what requirements are, what the typical paperwork required is, and the typical benefit to the consumer in today's market. So let's get started here. So what are the requirements for the VA IRRRL loan? Well, first you got to have a VA loan currently. So you got to own the subject property. The loan has to be in the VA, in the veteran's name. At the time of closing of the IRRRL loan, at least 210 days must have passed since your first payment was due on the loan being refinanced. Also, you need to have 6 on-time payments made in the last 6 months. So it's basically like if you closed a loan on January 1st of 23, you're going to have to wait till at least after July 30th of 23 for closing on the refinance loan. Only the VA loan can be paid off of this transaction. So if you're looking to consolidate debt, pay off credit cards, or maybe you have a HELOC you're looking to pay off as well, then you want to probably look at a VA cash out refinance to pay that off. But if you're just looking to refinance the loan you currently have, we're not paying anything else off, the VA IRRRL is the way to go. And you can do it on a second home or an investment property if that loan is tied to now investment property or second home because of orders cut, you moved. Usually we just need a letter of explanation for what's going on, that the fact that it was your primary home when you took the loan out. Not a big deal. Loan details, pretty simple. Funding fee, unless you're exempt, is drops down to 0.5%. So if on your first loan, you probably had a funding fee of 2 to 3%, depending on the type of loan, how much down, that kind of stuff. But on a IRRRL, it's going to be 0.5%. If you're exempt from the funding fee, then the funding fee is still not there. 0% funding fee. The interest rate has to decrease by 0.5%. So if you're at like 6.875 right now, it's got to be at least 6.375 or lower, unless you're going from an ARM loan, adjustable rate mortgage, to a fixed loan. There needs to be a test to recoup the costs with the refinance. So closing costs, etc., are included in that. Prepaids are not, so taxes and insurance not included in that, but the costs of the refi are calculated, and the monthly payment savings each month, if you take it over 36 months, it's got to recoup those costs, which is great. Typically, you set it up so that you have very little to no closing costs, so that it starts to pay for itself right away. For more details, obviously, just get in contact with me. So for the borrower, what do we need from the borrower? There's no income verification, no asset verification, no credit verification on anything other than your mortgage to make sure you've made those on-time payments. And there's no appraisal. So minimal action from you. Docs that we typically need, a certificate of eligibility. Most likely you still have a copy of that somewhere. If not, we can obtain that for you. Current mortgage payment statement or coupon, like your monthly mortgage payment, you can probably download that. If you don't get it in the mail, download that from your current loan servicer and send us a copy of that. Current mortgage note. This will be like 3 to 5 pages. It says note in big, bold letters across the top of it. You can get this from your servicer. If you still have your closing documents from your purchase, it's going to be in there. Again, it's going to be pretty short. It's just going to say the interest rate and your payment. It's going to say promise to pay, starting on this date, ending on this date. Then we'll probably need a homeowner's insurance declaration page because we've got to make sure there's insurance on the house that we're refinancing, and then some sort of ID and verification of your social security number. That's pretty much it in a nutshell. Very minimal. Again, bang for the buck. Let's look at an example here. Is a client that was at 7%. They bought about a year ago. And today's rate's just under 6%, so 5.875% on the rate. We're saving them about $306 a month in mortgage payments overall. This is the total mortgage payment because I have taxes and insurance in there. The loan amount, you may notice, does go up a little bit because you do start a new prepaid account. taxes and insurance get rolled into the payment, right, with your mortgage payment. So we start a new account for that. So we take out, it's kind of a sliding scale. It depends on when your insurance renews, depends on when your property taxes are due. And that, in this case, we finance that into the loan amount. It's your choice if you want to bring that in as cash to start that new account, because your old escrow account, that'll get refunded to you after the loan closes. So it's kind of take your choice. You can bring it, you can pay me now and then get the refund, or you can roll it into the loan amount. Then when you get the refund, generally you skip one mortgage payment. So that can be added, and you can make a one-time payment to bring the loan balance down to probably lower than when you started within a month. So it's totally up to you. And that's something we'll talk about when we connect. So if you like what you see here, just leave your contact information. A member of my team will set up and call or some kind of Zoom meeting. We'll go over everything and then work on a custom quote for you. And then you guys, you make the decision if that's good for you. Thanks again. We'll talk to you soon.